Alrighty, guys. Welcome to tonight's charting session. Hopefully, everybody's been doing well this fine weekend. Hopefully, you guys did some fun stuff and ready to get back to it. I have a big week, as I was just telling you guys, on the 30th, which actually I believe is a Wednesday. I'm moving out of my place, and then on Friday, I am leaving to Tulum. So I'm super, super excited to kind of start this new chapter, film a lot of content when I'm there. But I'm also very, very excited for kind of what the market's going to do this week. So I want to run you guys through basically where we are, kind of what I want to see going into this week, what my bias is, what I'm really just focusing on going into the week. So first things first, taking a look at news. We do have a no news Monday, so I do want to sit out Monday, let the market do its thing, build structure, figure out what we want to do going into the rest of the week. Tuesday, jolts at 10 a.m. looks great. Wednesday, it looks like we have 8:30 news, so that's really nice pre-market. And then I do believe if we have something later, we have 10 a.m. as well. So we have 8:30 red folder and 10 a.m. PCE index. Thursday, we have 10 a.m. as well and 8:30. So we have a lot of news this week, which actually is really nice. This is a bank holiday for CNY, not USD. Okay, I just want to make sure. And then Friday, 8:30 as well. So pretty much every single day this week has news except for Monday. So I think sitting out Monday is honestly a really good decision because what I want to see basically where we are in the charts right now is this. So we're starting to build a lot of bullish price action on the bigger time frame. These internal lows have been taken, and this weekly candle just closed pretty bullish now. We just ended up closing through this. On the monthly, we're starting to get a really, really bullish candle all the way back up, starting to reverse. So right now, we're kind of at our last line of defense if we are bearish. If we are bearish, I expect a high to be put in here soon because we've worked all the way back up to go take buy side. 4-hour manipulation has just taken place internally. This is where our 4-hour change in the state would be. So for me to really be bearish, I'm in between. And this is why I also think sitting out on Monday is a really good decision because we're in between two different areas of biases right now. We can continue higher and end up working towards this internal buy side level, or we can sweep this low and displace through it. So kind of what I want to see is the reaction at this area. What kind of order flow are we forming here? Because if we are bearish, I could possibly expect to see a continuation. If we're bullish though, and we want to see price still go higher, then I would want to see price come back down, sweep internal sell side, and then continue back higher. So depending on if we just want to build price action here, come back down, maybe sweep this, and then go back higher if we lack displacement. So if the draw on liquidity is higher, I'm going to be letting the market really tell me what we want to do. Because like I said, where we kind of are right now is the last line of defense for a bearish move. I would want to see price go lower. Even if we wanted to go to this high, I would not just want to see us go straight to it because if we do go straight to it, there's really no opportunity for me to take a trade. There needs to be more price action that gets built here. So if this is a market maker buy model on the bigger time frame, and this is just internal liquidity and we want to continue to external liquidity, there needs to still be more structure here built for me to take a long. So like I said, market may become DAG, soup the recent low, and then look to continue higher. But that is obviously what the reaction would be, right? What does the market actually want to show us? Now, if we're bearish and we want to have the sell side of the curve, and this was basically our internal buy model, and now we want to work our way back down, I would need to see price displace through this 4-hour fair value gap, or not the 4-hour fair value gap, the 4-hour change in the state, and I would want to see price go back to this internal low. So I also want to see to the left of us if there's any sort of fair value gap that we're kind of holding on to. There's this past fair value gap that we've already broken through, or that we've already kind of rebalanced to, so I wouldn't really consider it super high quality. I wouldn't really be watching it. Kind of see what else here. I mean, we have this 1-hour fair value gap, but really the biggest kind of form of the bias here is going to be dependent on this internal price action. So right now on the 15-minute, we did end up taking this external buy side. We have just swept this internal high. This fair value gap just got ran through, so I'm expecting right now, just in the overnight session, to see a little bit more downside. But what I would want to see, like I said, is just to let market kind of build price action in the overnight session, let Monday really do its thing, see what we want to do going into Tuesday once we start having some red folder news and just build more price action. Because the best case scenario is that Monday chops, or Monday builds more price action, or Monday sells back off first. So if we open up tomorrow on Monday and we're looking like something like this and we start to sell off on Monday, this would set us up for the rest of the week, and this is kind of what I really would want to see. And then going into Tuesday, possibly do something like this where we just kind of build price action here and then look to see price continue back lower. And this is kind of what I would want to see. So I think this looks really, really clean to see a sell model. I am preferring to see a sell model because literally all of last week was just straight bullish. From Monday all the way to Friday, we pretty much just put in new highs. So I'd like to see this week start to fall back inside this range. The bigger time frame objective has been taken, but obviously it's really all going to base off of the reaction if we follow through this low or not. So we'll see what happens going into the start of the week. I want to take a look at ES here as well. I believe ES is pretty similar to where NQ is. There's not much difference. Internal high just got taken. I think this is honestly more clear for a rejection on ES because we have this volume imbalance in this for value gap. So we have this for value gap to the left of us and this volume imbalance that we're currently we're bouncing back into, and this has not yet been tapped into. So ES looks nice here for a possible move lower. And honestly, like looking where we are here, this to me is bearish. Like on ES, I think this looks a lot more clear. Like we have now rebalanced back to equilibrium and OTE of the previous price leg. And I'd want to see now this internal high get taken and us to start falling back. So I am bearish going into the week. I want to see a follow through the 4 hour change in the state to really validate the short and validate a bearish bias. And if we can get this, I think it's really, really clean to the downside. I think it's really, really clean. What do you guys think about that? Any questions specifically on this bias? Any inputs? I want to see what you guys are also thinking too. Are you guys more leaning bearish, more bullish going into the day? Are we seeing the same things? Any sort of things that you guys are seeing as well? Looks like a bigger market maker buy model. It could, but kind of where we are right now, I'd like to see that 4 hour reject. But again, I think it all just depends on if we fall through that low or not. Let us go down. Just want lower. Want bearish, but need more. Have clear picture. 100%. Bullish because the monthly candle is looking higher bullish at least for now, but we still have time for that to close. And that candle is still showing kind of where we are right now too. I still would want to see us reject this. But again, obviously it'll depend on kind of Monday, but well, I would want to see. So the thing is this can get ran through and we'd go towards this high, right? But based off where we are right now, internal buy side is taken. I want to see this high. I don't want to see price go. If the market is bearish, the market has done what it's needed to do, right? We've rebalanced back to OTE on the bigger time frame. We're in a 4 hour bearish fair value gap. Internal buy side just got taken, and now we're starting to form this internal model. So we're generating sell side liquidity, right? This was the internal soup to go higher. Now I want this to be the soup to go lower. So now we're generating all this sell side, and I want to see price now fall back down. At least to this internal low. If we can get this change in the state right here, this will be a super clean sell model, in my opinion. Because I'd want to see it look like this. Four hour for like, oh, the recent one? No, this doesn't need to get ran through for us to be bearish. We just need this change in the state. If we get this change in the state, I don't care about these fair value gaps because order flow has shifted. So I would not expect these fair value gaps to hold if this change in the state happens. I would expect the draw on liquidity to be the internal low. It doesn't need to be Jacob. NQ daily and a bearish fair value gap, all that daily wicks to the left of us. Would you consider CE of the wick? Let me see what NQ, let me see. Yeah, possibly, but yeah. Yeah, it's not. It doesn't hurt to mark out. I wouldn't be. I don't want to see us go to this though. I would not want to see us go to this. But what we might do is if we want to be bullish at the start of the week, I would prefer to see this. If we want to go to consequent encroachment, we would put in an SMT and then go lower. So if that's the case, this is what I would want to see. Yeah, it's a possibility, Charles, for sure. Yeah, if really I'm bullish, like for me to be super bullish, because right now I really can't be either or. I'm leaning bearish. For me to be bearish, I need to see a close below this. For me to be bullish, and for and more so for me to take a trade that's bullish. For me to take a trade that's bullish, we either need to come down and sweep this low or have some sort of SMT at this low, or just build more price action here. Like, because if we just continue to do this and there's no really setup, there might be a continuation like at open or some sort of trade like that. But I need to see more price action. There's kind of no entry when we're so far up in the range until there's more price action internally. But I'm expecting the market to most likely go here, this low, maybe hold constant encouragement. We've had kind of this internal model in the overnight. Fair value gap just got ran through on the 15-minute change in the state. Friday night with you, but I don't know. Colors are starting to grow on me, dude. I'm telling you, these white charts are doing wonders. I feel like I can see a bumblebee's wings cells. ETA for faith trading. Okay, so this is the plan. Oh my God, I just hit my knee so hard on my desk. Okay, so basically what we're gonna do is I'm changing it up a little bit from what I announced because I realized there's something I want to do. Now, I really ran into the problem and I meditated and thought a lot about the idea of making a community specified for faith, and also then on the back end of it, having a community that's a small subscription. I just don't want to do that. Like, in my opinion, now, even if we're doing public Bible studies and I'm bringing public people on, I just don't want to label it as that. And I know where my heart posture is, and like I know that it's never for that, and I know that internally, and I believe that God knows that. But in my opinion, it puts me in a position where I don't think I'm fully ready for. I don't know if, like, for people that are in faith, it is a very, very big deal to be a teacher of faith. It means you are held to a very, very high standard, which I want to be held to, but I want to be held to it in a different type of environment. So what we're going to end up doing is I'm going to open up, back up, and relaunch the old Tactical Traders community because there's already like 10,000 people in that community. Right now, all the channels are just closed. So right now, me and Wob are rebuilding out that community, and we're going to do all of the public Bible studies in there. So we're going to do Bible studies in there. We're going to do seminars and webinars in there. And then we're also going to do the same schedule that I put in the announcements, 2 live trading, 2 charting sessions, and we'll do it under Tactical Traders, not under faith trading. So we're going to still basically do the same thing, but it's not going to be not going to be branded as that, basically. But so what we're also doing right now is Nemanja, my head dev, is designing a website for the new community, basically explaining, like, just super, super clean, really nice visual of kind of what it is. So we're kind of working on just really the professionalism of it right now and building out a schedule and kind of what we want to do. So I would expect next week, like probably next Sunday, we'll probably start, I'll start sending out the link, getting as many people in as possible, and we'll most likely do our first free kind of Bible study on Sunday. And then we'll start doing some sessions in there for trading a little bit after that as well, once we kind of finish setting up. But I'm super excited. I've been super, super excited to dive into, especially with my students, with my traders. Like, even if you are not religious and you are not, like, the value and the life lessons that you can learn in the Bible are it doesn't have to, even if you don't believe in God, it's still something that being in the environment of just bringing people together to talk about, complex questions and ideas is something that I think is a lot of people need, food for thought. A lot of people need an outlook to, be a part of a community that they can trust, that they can ask questions, that they can feel open and safe to be able to ask those questions and share their, struggles or whatever that is. And so I'm super excited because I think it goes hand in hand with trading. I really don't think that you can be a successful trader without being a successful in your mind and in your spirit and be guided in that way as well. So I'm extremely excited about doing that. Yeah, we'll still be live trading daily. On the announcement, you said that there are some people who paid for 6 months of the server. I think I paid $3,000 for a server after the under 18 discount. Did I pay for the lifetime or the 6 months? I'm not sure what I paid for or is mentioned, but I forgot. Everybody has lifetime right now. So everybody in this mentorship, if your full payment is paid off, then you have nothing to worry about. You'll always be in here. And there's some people that, because throughout, I think when we first started, one of the things that we did was we just offered 6 months and not lifetime, and then we changed it. So right now, because we're reopening the other ticket or the other smaller community, I just want to give you guys lifetime so that you guys can just grow with me, I don't want to put any pressure on you, but I just want you guys to be a part of this forever. I know, I'm super excited, Hunter. Super excited. Yeah, of course. I really, I hope you guys know, my goal is to always make you better, and there's some things that we're kind of working on too, with Sarah and also bringing on. So what we're going to be doing, and kind of what I want to share with you guys is kind of what my vision is for reopening the low ticket community and reopening the other tactical traders community, is I am looking for analysts to bring on for that community. So I am currently in talks with a couple traders that I am thinking about bringing on, that I enjoy, that I think would be good to bring onto the community and really build out that community for. Because my goal is to always help people that want to trade, and this mentorship specifically, and kind of the value we teach is the more hands-on, costly approach of this is literally everything you need. And some people can't afford that. So we basically are just creating an option for that where we can still add value and then also have free value, which is, basically a chopped up version of education from YouTube and a chopped up version of, a free schedule, things like, again, all the Bible study, all the mental psychology and scripture stuff that we do is going to be just completely free to open to anybody that wants to join and listen and learn. Excuse me. That's correct, Lucas. But what I'm thinking about doing, and I want your guys' insight on this, tell me which one you prefer. Basically, this is kind of what I was thinking. Either the days in which we are doing the live trading in there, we'll probably just do it on Zoom. So all of the private sessions we do here, we'll do it in the Discord, and then the 2 sessions that are shared, either would you guys prefer if we just do it in that community, or we do it in this community, I enter on this call, and then I share a Zoom link to the other people, so we keep them separate? Do you guys want to be separate? Do you guys want to be together? Do we want to just do it all in that community? Because you guys will all have access to it. Separate? Okay, so basically we would go live in this community, and then I would send a Zoom link to that community, basically. Do you guys want to be separate? So you guys... Okay. Okay, well, we can do that. Separate got me feeling like a Pharisee. Or what about this? What if we did a separate role so that in Discord, what we basically do is that you guys are allowed to type in the call chat and the other students are allowed to type in a separate chat. But we still do it on Discord. So for example, if somebody was in this call right now, they wouldn't have access to type in this chat, but they would have access to type in the trading general chat, I guess. But which one do you guys think would also be better too? Because I want to be able to make everybody as active as possible. And I think maybe doing that might lessen that activity because I want to include everybody as well and hear people's, just ideas and talk with one another. At the end of the day, it's a community. So Lucas. Yeah, no, I agree. I definitely prefer lives on Discord. So I kind of want to figure out what the best way of doing it. I think there's a couple different ways of doing it. And obviously too, like the more that we start doing it, the more that we can kind of see which one works best for us and which one you guys prefer and they prefer, and we'll go with that too. Yeah, I agree, Alanya. Aliana. I got to figure out how to pronounce it. It's Aliana. Aliana. Am I correct on that? Please tell me I'm right. It wouldn't mess things up, no, Ben. It more so just like it doesn't really do anything. It's not really to like add more bearing for me. It's literally just me starting a Zoom call, sending it to them, and then hopping on Discord with you guys. So for me, it's literally just I just have two different chats, so that I'm just separating it. Which basically, I mean, yeah, it's kind of segregational, but but also I don't want to get you like guys in chats with goofballs. Like I want to, you guys are my most important. Yeah, so that's one of the options, Lucas. Is one of the options is I'll do a Zoom live while we're on live. They'll be in Zoom chat, you'll be in Discord chat, or we do it all in one in the Tactical Traders community. And I think once we start, we'll just test it out and see which ones you guys like better. And honestly, what I would prefer to do is I'll prefer to this, and tell me what you guys think about this. We'll start by just putting everybody together in the other community, and we'll do 2 of the trade sessions in that community. And if it gets to a point where it's like it's just too crazy, then we'll split them. What days are the ones with low ticket? I haven't decided yet. What you guys tell me what days you want. You guys get first dibs. So what days do you want? Tuesday, Wednesday, Thursday is greedy. Tuesday, Wednesday, Thursday is greedy. Give them Monday and Friday. That's crazy. But Monday, it can't be Monday because it depends. Okay, everybody's got to get Monday. Everybody has to get Monday because no. Yeah. Everybody has to get Monday because Monday's one of those days where I will most of the time won't trade. If there's no news, then I'm not trading Monday. So if they're getting a Monday, that means most of the time they're just going to get one other session because I'm not going to be trading Monday. So I say Tuesday, Wednesday, or Wednesday, Thursday, or Tuesday, Thursday. Yeah. We could do Tuesday, Thursday. Actually, yeah. I think that's fine. Only when Powell speaks. Well, also what I'm going to end up doing too is keep in mind, we're going to be building out the schedule. So I'm going to be bringing on more analysts. And since it is a, quote, low ticket community, I do want like analysts in there and like teaching that has like alert channels. And they're going to also be live trading some days so that you guys can also just like bounce around and like see what other people are doing as well. And like just kind of have this big environment. And possibly bring on some crypto people as well. Like I want the low ticket tactical traders community to kind of be like a big community with everything. So like I want really good traders in there. I want crypto analysts in there as well, and just kind of like build out that community. And then this community is like specifically small group niche. Like our goal is just like I'm cranking and working on you guys. Yeah, you guys get access to everything. I say we give them a chance first, Lucas, and if they fuck it up, then we'll give them the whip. You guys will always get my most attention. That's the whole point. You guys are my first and foremost. My first and foremost. But question for you guys. How did you guys do last week? I really want to dive in and ask some questions about kind of some things that you might have been struggling with last week. I want to know, like, if everybody could just like spend 60 seconds, give me a little paragraph, a little message of some things that you noticed from last week. How did it go? What did you learn? What are some things that you're maybe struggling that want extra help with or have a question about? And just give me a little rundown of kind of how last week went for you. Somebody's already created it, Hero. So Sniper, his name's Matt. He's a buddy of mine. He also trades the Forever model, and he kind of actually snagged this whole. I love Matt, but like I think he basically tried to take the Forever model and he like kind of branded his stuff on it, I guess. Like he created the forevermodel.com, even though like my video was before it, but it's okay. But I'm pretty sure he created an indicator with two, which is a guy who codes a lot of the indicators in the space. But I'm not sure where it is. I have not used it, no. Actually, I might message two on Discord. Let me message him on Discord. Yo. Anyway, I could get access to the Forever model indicator. I just messaged him. I'm going to message Matt as well. I'll test it out and I'll tell you guys if it's good or not. I'm pretty sure 2 built it. I need to make sure though, because I might be messaging him and he actually had nothing to do with it. Yeah, he did. He did. Okay, wait. Let me check 2's website. So 2 is a guy that he makes a lot of the indicators in the space. He has like packages basically for these indicators. I don't use really any of them. I haven't really tried them out, but yeah, the Forever Model one is the one that Sniper made. Does it show where entries? I think it just shows the SMT changing the state. Wait, let me. Yeah, I don't have it. Okay, wait, let me go through these. Honestly, last week I personally just broke many of my rules, was punished for it, but overall I'm glad it happened because it humbled me. What do you think? Well, number one, like anytime that we break our rules, anytime that we see something negative in our trading, like what is your initial reaction to it? Can you recognize the problem? Was it something that was an emotional problem? Was it based off of rules on just like you needed to step away? Really dive more into that. Up 1.5 on my funded, first 50K funded challenge. Really liked my patient from last week. Feeling really confident in my abilities. Waited for the whole week for a trade. Took an L on Friday. It went with my day, my weekend. No resentment or frustration. Love to see it, bro. That's exactly how we need to act. Nonchalant. The best traders are nonchalant traders because they just, the scoreboard gets wiped and we go into the next game. Had to speak with Sarah because my psychology was honestly so bad because I think I just blew 200s in 1 week because I kept on sizing. Why do you think you kept, why are you sizing when you know you shouldn't be? We got to recognize a lot of the times when we're putting on size, like for example, I'm a perfect example. Like the first week that I started putting on size, I think I was down like 15K. And then, but like I went into the market telling myself, Justin, I'm going to size up. So that I was more focused on sizing up than actually taking good trades. So you need to be able to recognize when the actual time is like, hey, Justin, this is an actual opportunity to size up, and not just being like, oh, I want to size up just to size up. Like if there is a reason to size up, then size up. But there's got to be A+ setup and possibly scale in and stuff like that. Was on a 3-week win streak, got my butt handed to me every day last week. Super discouraging, but I'm still trying to keep my head up. I think it's a mental state. What do you, if you had to go look back and say, okay, I've been on a 3-week win streak, and then last week was not good for you, what is the major differences that you can see in your performance? Like, was it something internally? Was it something externally within the market? Just the type of price action? Was it your decision making? If you kind of had to relate like the major kind of key point of what made you successful in those 3 weeks, but didn't in that 1 week, what would that be? Implemented a new one and done rule to protect capital, improved on pulling the trigger as soon as the A+ model presents itself, even in Asia/overnight. Ended the week strong in profits, took my first payout, was able to sit out on Friday. Let's go, bro. I'm proud of you, bro. Let's keep ripping it up, bro. Been training for a few years now, joined last week, finished the course, and found a lot of value in everything. Still piecing everything together. I'm a little confused on how you decide how much risk to put on each trade. I know it changes with quality, but I also don't know how you grade each setup. Yeah, great question. So my A+ setup is the forever model. So basically SMT. So the main things I need for an A+ setup is clear draw and liquidity, right? Where's the market drawing to? If I have a clear idea, now how can I find and have a clear draw on liquidity? What am I looking at? Inverse fair value gaps. I'm looking at maybe changing the state on the bigger time frame, right? And overall, maybe it's even a forever model inside of a forever model. Maybe the bigger time frame forever model is my bias. Maybe that's telling me what the clear draw on liquidity is, right? Obviously, liquidity sweep, SMTs, right? All of these things can give me an idea of what the draw on liquidity is. Once I have a draw on liquidity, I want to see obviously a liquidity sweep, some sort of manipulation. I want to see an SMT in favor of draw. I want to see a change in the state, which is displacement in the opposing direction. And that's pretty much all I'm looking for. I need a clear draw on liquidity. I need clear manipulation. I need an SMT in favor of the draw, and I need a change in the state. And then what I do is entry is either pull back to fair value gap. Could possibly be a turtle soup, some sort of internal low, right? So then an entry maybe be here is like I zoom in and then I see an internal sell side level get taken, and then I trade after that. Maybe pull back to equilibrium, right? This entry depends on the setup. Normally when I'm looking at the actual model, I can decide, okay, where I want to take my entry. But this is what I'm always looking for. Every single day, this is what I'm looking for. I'm identifying what is the clear draw. If there is no clear draw, that's the first thing that tells me, Justin, don't do anything. Like if I come into the market and I immediately can't recognize or have an idea of what the draw on liquidity is, I'm not touching the market. There's no reason to. Next, if I do have an idea of where the draw is or an idea of where I want to see manipulation, that's also crucial too. Sometimes I won't have this. Sometimes this. Oh, actually, I don't think I can change it. But sometimes this clear draw on liquidity actually comes next. This would actually be first sometimes. Where can I expect to possibly see manipulation? So if maybe, for example, liquidity is not clear yet, maybe sometime, price action's kind of choppy, whatever, and we look like something like this, maybe I have an idea of like, okay, there's a fair value gap to the left of us, but, this could maybe get ran because there's buy side resting above, right? So let's say there's buy side resting above and there's sell side resting below. So it's like, okay, I don't really have a complete idea of what price wants to do yet. Like I don't have a complete idea yet, right? Now, what is going to give me that? Well, I can see, okay, well, like this internal high just got taken. We're kind of displacing through it though, and then what happens if like this happens? Okay, well, price is starting to respect it. Oh, we're trying to run through it. Oh, but then we put in an SMT here. Okay, so now I'm starting to have more data. All right, I'm expecting to possibly see manipulation here, right? High just got taken internally. We just now put in an SMT holding this bearish fair value gap to the left of us. There's draw on the sell side is still resting below. We've taken these internal highs, right? This is where I can start to be like, okay, I'm starting to lean more bullish or bearish. I would want to see a move go lower. Now, this is where I could take my first entry. Immediately after this high gets taken, I can take my entry here if there's an internal model. So, for example, it would look like this. Boom. So this is the internal model. SMT here, change in the state here on the lower time frame, and I can take my first entry. This is my first entry short. This is where I would enter lower size. Why would I enter lower size? Because there's two models going on here. There's this standard deviation, and then there's this standard deviation. So this is where the bigger time frame draw comes into play. Because if the bigger time frame draw is lower, I want to see this standard deviation be the draw, right? I want to see us go all the way back to the lows and through the lows, right? So this would be my first entry. What would my second entry scale in be? once this change in the state. So if I was to zoom out to the bigger time frame, right, let's just like kind of squeeze it out here so we can kind of see what it might look like. But something like this would be my change in the state. So then this is what I would wait for more confirmation of what the draw on liquidity is. So I would enter here, put on low size, probably risk like 3K. Then once we get this, I would then wait for a pullback to then add the rest of my position. So now, let's say I enter the rest in here, or I even wait for price to come back, maybe sweep some internal low, or maybe even run a fair value gap back to the downside, something like this, and then I add to my position. So let's say, for example, I add 3 contracts right here, stop is at this high, and then I add 3 more contracts right here. So now my fill gets moved to the even point, right? So if I enter 3 here, it doubles, which means my fill gets averaged. So now this becomes my fill. This red line becomes my fill. So now the trade that I'm initially risking here, if I'm entering, let's say 5 contracts, right? So let's say I enter initially 5 contracts. I'm risking 6K. Like for example, actually I'll just do four contracts. So for example, if my initial trade on this is I'm risking 4K and that's my stop loss. Now, when I enter back here and my average fill gets moved to here, now what do I do? Well, let's say my stop is now the exact same. So now I'm in 8 contracts. So now my risk, oh wait, actually hold on. Wait, let me measure this out. I need to see this. This is a crucial part here. If I enter 4 contracts here, stop loss here, price target here. How much money would I win on this trade? I'm risking 5K to make 32. Okay, keep that in mind. Keep the RR in mind here. In fact, let me do the math. Let me whip out the calculator real quick. 32,000 divided by 5. So a 6.4 RR, right? Really, really good. Now, keep in mind the number of the P&L. Keep in mind the number of what it would be. 32K win. So now, if I then doubled the position around here, my fill gets moved to then here, and let's keep my stop at the same. So now I'm risking 8 contracts. How much is my risk? Oh, let me change this. Great. 8. So now my reward is now 57K. So compared to what it was before, which was 32. So it's less than doubled. My risk has now tripled, right? So now this is where management comes into play. For example, this is how I now manage my position. If we come back up and there is an internal model that tells me there's no reason for a price to go back higher, for example, something like this, or something like this, or something like a fair value gap here gets ran. If we then run this fair value gap to the downside, I'm moving my stop to this high because now I don't expect price to go back through this if we run this fair value gap. So if the market, so what I'll normally do here is I'll add to my position, have a tighter stop loss, risk a little bit more, and then once I get extra confirmation, I'll either look to add here and then move my stop, or initially add here, fill gets averaged, and then look to finish, and then move my stop to this high. So now the management of this is basically just lowering as much risk as possible the more data is given. And now this trade, I'm basically in 8 contracts and I'm risking, almost pretty much the exact same amount to almost double my reward. So it depends on the management. And this is kind of how I go about looking to scale in if it is a high quality setup and if we have good market conditions. Blue 2 evals last week being super greedy, overtrading, breaking rules, trying again this week, working on patience and discipline. You got this, bro. What do you think the main issue of that is, Franco? Still trying to make sure the drawn liquidity is on the right side and not getting mixed up with the external and internal so much. I guess my question would be, what is the best time frame to look for the external drawn liquidity to take a trade? Just general preference to take a sit? Okay, so top-down analysis. Start on the 1 hour. And honestly, I like to start from like the daily all the way down to like the 15-minute. But the most important thing is you want an idea of where price is going no lower than the 15-minute. The 15-minute is like your lowest time frame to have an idea of where price is going and an idea of what the draw on liquidity is. So I don't recommend going down to the lower time frames until you have an idea of where the market is going on the 15-minute time frame. So for example, if I'm looking at where we are right now, I have an idea of where price is going on the 15-minute. Fair value gap got ran through, buy side, right? Consequent encroachment, this low is where I expect. So after that's happened, then I can zoom in here and look for an internal model, right? Price reverts back to this, it holds it, maybe short here, right? Then I zoom in and look for an entry, but only on once I have an idea of where price is going on the bigger time frame do I want to zoom in. I implemented a new one. I think I already read that. Been trading for a few. Oh, I read that too. Yeah, that's that Slayer. Last week allowed me to feel more confident from how I felt in the past. I feel like I'm growing in my execution with trades, understanding the best times to execute. Still haven't passed an eval yet, but hopefully God has a plan for me to reach my goals with passing my accounts. You got this, brother. You got it. Again, if you're continuing to just focus on the inputs, you're recognizing what the mistakes are and you're learning from them. It's just a matter of time until you just got to keep walking the steps. Bought a 300K fund and entered 10 cons and lost the account in like 3 minutes. Brother, 10 cons? You're just setting yourself up for failure, especially if there's trailing drawdown. Did you do that just because it was 90% off and you were just kind of like YOLOing it? Kept on sizing because I passed the funded quicker, but then low-key, that just sent me back, and then it just cost me more money. Exactly. Anytime that you know that you are focused on trying to scale and trying to make money, the market's going to show you that in your face, and that's how we learn. It was a lot of FOMO. Also, yeah, I could tell I was getting tilted, but didn't step away from for long enough and just forcing trades. Also, just working on new evals got me in a different headspace, but I spent a lot of time fixing over the weekend through journals and reevaluating my checklists, etc. Beautiful, brother. Put in the work. Had some good days, had some bad days. Hard time sitting out when trades were there. I'd like to call them correctly, but not enter, and then I'd see them do exactly what I expect, and since I missed out, I would try to make new trades happen and get chopped up. Yep. Very, very easy to happen, bro. A lot of the times that's kind of a very similar thing that happens with a lot of traders is we'll build a sense of false confidence because we'll be like, all right, I'm not trading today. And then we'll see a trade happen and we'll be like, okay, I'm not going to trade it. I think this is what's going to happen though. And then it happens and then, oh, I'm a beast. I know exactly what the market's going to do today. And then you start jumping into trades and then fuck around and find out. What happened last week was I took one trade with you, got stopped out, and then I took second, and my entry was 4 points down than yours. And when you told you are going to put stop at break even, I immediately did it. But you were just thinking, and I got stopped out, and the market went in your favor when you were 9K green around the day, and this thing messed up my brain. It was like a glitch in my system, and I lost my control and awareness. Please share your thoughts on this. Well, first of all, brother, number one, I'm pretty sure that trade ended up getting stopped at break even anyway. So I think at some time in that position, I was up 9K. But I do not I think, in my opinion, that the saying, never turn a green trade red, in my opinion, is stupid. Now, it depends on the trader that you are. But in my opinion, it doesn't make sense because that means I'm trading my P&L and I'm not trading the chart. So I, number one, recognize that trade got stopped to break even. Number two, if you are being, and this goes for any single person in this chat that is being affected by my trading. If you come on live and watch me live trade, the easiest way that you are more focused on what I am doing than what you are doing is exactly that. You start getting emotional based off of my position instead of your own. Don't care about what I'm doing. Use me as a guidance. Use me as a guide, not as the fisherman trying to catch you fish. Use me as a reference to build conviction in an idea, in a setup, to stay calm with, to stay disciplined with, to be patient with. And I'm not saying that that's what you were doing, but I'm saying be aware of it. Because a lot of the times we can fall into this thing of watching somebody and learning and trying to, and then falling into a state of relying on them. And it's necessarily purposeful, but subconsciously. And so that's why I always recommend there should be at least one day of the week where you trade by yourself so that you can focus on building your personal conviction of seeing the market your way. Because that's the only way to test if you actually know what you're learning or not. First 2 days making me not take a 2-year trades that I wanted to get used to. Pressing the button the rest of the week. Took a loss with complete final, which was on a Wednesday. Realized I wasn't being reactive. Tuesday or Thursday, Friday were just trades I should not have taken. Biggest takeaway is I'm taking entries off rip, so need to be more patient and wait to PA to build even more. I miss a trade equals building patience and reactiveness to the market. In my opinion, one of the best ways and mindsets to have going into the market is act like you don't want to take a trade. Like, and I know it sounds stupid, but genuinely think about this. When we act like we want to take a trade, in reality, that wanting to take a trade actually stems like an 80% more chance. And now obviously that's a number I'm pulling out of my ass, but it gives a higher probability percent chance that you're going to take a trade. And even if that trade is not good, you're going to take it. Now, if you go into the market using the reverse psychology of that idea, and you come into the market planning to not take a trade, not as a rule, but just as a mental standpoint, not saying I'm not taking a trade that's in my rule and I'm not going to break it, but in the sense where you come into the day and you don't care. You are there not to take a trade. You are there to watch the market. And that's what people, why you guys set yourself up for failure is you sit down to trade. You need to sit down to watch the market. Because you're setting yourself up to take a trade when you go to bed at night and you're thinking about, oh, I can't wait to have a great week. I can't wait to grow as a trader. And then immediately Monday, Tuesday opens and you're just ready to press the button. You're not ready to watch the market. So start amping yourself up to watch the market, not take a trade. Stop caring about taking a trade. The best trades and the trades that you should be taking are the ones where you're watching the market and it's so clear in front of your face. You're like, oh, this is exactly what I'm looking for. Because when we're like, oh, wait, this could maybe work. Oh, this maybe got ran through. I think that we could maybe see this. I think that we could maybe see this. No, it should not be maybe this, maybe that. It should be, fuck, this is my model. And you guys know the difference. Because when it's there, it's there. Don't exchange your long-term desires for short-term dopamine. My question on the drawn liquidity is what time frames are we using? So price is completely fractal, right? Meaning that right now, if I'm looking at this time frame on the 15-minute, I want the drawn liquidity to be this low. Now, this drawn liquidity is not bearish necessarily on the bigger time frame because there's no context yet. So I could possibly see the drawn liquidity be this, but only when we get displacement through this can I say that this is the drawn liquidity. So I recommend do not form a draw below the 15-minute. You want to have a bigger time frame, 5 to 15-minute and above idea of where price is going so that then you can zoom in out of the 5-minute to the 1-minute to understand what the internal price action looks like in relationship to where you want to see price go. Apex trailing drawdown on unrealized profit is fucking painful. Like unrealized profits, sure, if a trade jumps up and then retraces, the retrace counts against you. Oh, I know. And that's why I know. Honestly, for the people who have not been trading on Apex and have traded on Apex, or more specified question, for the people that are trading on other prop firms currently that have traded on Apex in the past, do you recommend not to use Apex, and do you prefer the ones that you're trading right now? Because of that specifically. I'm in PST time zone, so the market opens around 6:30 for me. I'm always missing out trades because I can't wake up early, and I'm sleeping so late because I'm doom scrolling on Reels and TikToks. Brother, you can fucking wake up early. Get off your fucking phone. Go to bed at 8 o'clock at night and wake up for open. If you can't do that, how do you expect to be successful? You gotta focus on doing the little things first before you can accomplish the big things. Price action totally looked off to me. Sometimes it looks like I was literally looking at hieroglyphics. The previous 3 weeks, I felt like Neo reading PA, to be honest. I do have a lot of off the chart stress, and my mental stress could do better. I guess I do the lack of discipline to stay off the charts sometimes too. I'm struggling to regain the confidence. I think one perspective that always helps me out when it comes to that specifically is ask yourself what work actually looks like in trading. And one of the analogies that I used to use that I think is really good to think about is if there's a version of me who sits on the charts for 5 hours and waits for a trade and then takes a trade that's not good, and then he loses 5K. And then there's a version of me who didn't look at the charts at all because the intention was to, let's say, skip out on No News Monday and protect capital. Who do you think is putting in more work? The person who didn't look at the charts at all, or the person who spent 5 hours looking for a setup that wasn't there and ended up taking a trade? So you have to recognize that you are paid for your decisions. You are not paid for your time. And until you understand that and you start treating that as what the business is and not as what your time is, you're going to have a different perspective on how you execute. Justin, on Friday, I put my initial entry when we ran this 2-minute fair value gap on ES, had the change in the state. Initial risk was 350. Then I added when NQ got a strong closure through a 1-minute bullish candle, moved SL above that high. Risk was the exact same. Personally felt good about this management, even with the loss. Any thoughts on this? Yeah, this was the same trade we took. I got stopped at break even on this, LP. I think that was a fine trade. I don't know if you saw this message I sent a couple days ago. One thought I wanted to share that might bring up even more value. Since many of us are trading on funded or evaluation accounts, would you consider occasionally walking through how you would approach those types of accounts specifically? I know you trade live capital, which naturally requires more precision and a different level of risk management, but even a couple of practice sessions or live trading sessions when we simulate funded or eval style trading could really help bridge the gap for those of us that still are in that stage. One thought I wanted to share that might bring up even more value, since many of us are, oh yeah, you copied and pasted. 100%. And what I also will do too, and tell me if you guys also want this, because this is kind of a thought that came to my mind, is while I'm trading, because my entries and exits are going to be a little bit different depending on if I was trading on a funded, I am going to speak out loud and talk to you guys how I would position it if I wasn't a funded. Because a lot of the time when, like for example, on the trade on Friday, I'm up 8-9K because the market just goes straight down. At that point in time, I would be saying, guys, scale, because I'm expecting a pullback and we just sold off 50 points already. Start taking off your position, because if the market comes back up, that's trailing. You're going to get fucked on trailing drawdown. So this is where you should most likely be taking your position off. Now, obviously, that's how you need to be understanding how you need to take profits. If the market gives you it, you take it. That is how you need to trade on a funded. If the market gives it, you take it. Can you explain the manipulation part of the strategy? Is it typically after the 15-minute buy side is swept? Just to clarify, it will make one more above below swept liquidity. Yes. So normally what I would want to see is some sort of external high or low, or some sort of bias level high or low get taken, and then internal high or low get taken, and then a change in the state. So for example, this is a perfect example, right? Buy side's been taken. Right when this was taken, right? Notice we now have this big move, right? There's no area in which I could draw a change in the state here because there's no down close candle. It's just a straight move up. So I'm expecting another manipulation leg. So market has an initial rebalance. This is where all of the first initial shorts are jumping in too early. Again, even on the 5-minute, there's no model. So what are we waiting for? I'm still waiting for a change in the state. Boom. So now internal buy side's been taken. A first sign of bearish order flow, 15-minute fair value gap getting ran through. And this right here would be my change in the state. This would be my series of down close candles. So as soon as we wait, right here, boom, right now I can short. Having a hard time understanding between drawn liquidity and returning to equilibrium. This happens a lot of the time happening when I don't know if it's a retracement or if it's going for the drawn liquidity. I think this is just because I don't know the higher time frame draw. Can you explain how you go about finding the higher time frame draw? Exactly this. What is the model showing you? Where is, number one, high probability areas of liquidity? So session highs, session lows, stacked equal highs, stacked equal lows. Those are areas in which I want to see the market continue to come back to. So for example, like right now, there's a lot of stacked lows down here, right? Now these have kind of been taken already, but there are a majority of these kind of stacked lows that I want to see price come back to. And this is where I'd also expect to see a change in the state and follow through. But it all has to use the tools, right? So finding the draw is about using the tools, right? inverse fair value gaps, change in the state, using displacement, looking to see where manipulation is, right? A lack of displacement, right? No, notice a lack of displacement through the highs. And notice there's sell side that was created and generated below us, right? So all of these things are giving us an idea of where the draw is, and then we zoom in and we look for an entry in relationship. So we can see the market starting to continue to the downside. So the difference also between the market rebalancing the equilibrium is also in relationship to the draw. So let's say we keep this low intact, and the market rebalances the equilibrium of this previous price range. So now the market rebalances to the previous price range and then maybe does something like this, right? And then runs whatever fair value gap is here to the downside. So the draw on liquidity is still lower, but we rebalance back to equilibrium and then continue. So it's all in relationship to what the model is and whatever you are looking at, if that makes sense. I'm hoping that answered your question. If it didn't, ask a similar one. Trades like these are tough because I did everything I was supposed to. Entry model was an A+, but I sucks because I would have played out. I just got waked out of break even. This was late Friday. Set SL above break even, walked away in pain. Yeah, this one's a little bit tricky. Honestly, I feel like this trade, your initial stop is, I feel like, a little bit even too tight. I guess you don't have to move your stop to break even, especially with this move. I just don't like this big down close candle, like this big down move with literally no structure and then just us like moving price back up. So I think this is honestly a fine trade. In my opinion, if I'm moving my stop to break even here, I would probably do it anyway, because if the setup's not clear enough and I'm a little sketched out by how price is building, I'd most of the time do the same thing. Even crazier, after getting stopped out this week, I did 4 practice trades, and they all worked out for my real accounts. I get fried. I guess I'm going to get back on FX replay and focus on the forever model, try to stay focused. 100%, bro. And start testing ideas, right? Start thinking and viewing the market in different perspectives. And even like one thing I always want to think about too is anytime that I'm looking at the market and I'm like, okay, I don't really know why we're building price, or I don't really know why something's going on, I'll delete all the drawings off your charts and zoom back out and relook at it from a completely new perspective, right? Do a complete new top-down analysis, find where you are, and if your answer is still the same, that's how you know it's a clear bias. If you wipe everything off your chart and you do a complete top-down analysis again, and you're coming to the exact same conclusion, either the conclusion is it's still not clear or maybe it is clear, that's continuous confirmation, because a lot of times we might be seeing something that's not there, and then we'll zoom out, refresh everything, and we'll be like, wait, there's actually really nothing here. For risk management purposes, do you recognize your risk on how many trades you are projected to take in a month for expecting what you are risking for the month and not losing the total investment? For risk management purposes, do you recognize your risk on how many trades you are projected to take? No. Because every month is different. Every month is different. Now, I have a mental trash bin is what I like to say. That's what I call it. A mental trash bin of money I'm okay with losing. So, for example, right now, the account that I'm trading, which I'm actually going to be moving funds over to AMP, I didn't realize that the TOS is not good for trading futures. Like the initial margin for TOS is like $12,000 for an NQ mini. And then on AMP, it's like $400. It's fucking crazy. So I'm moving funds over there and the commissions are lower. But for me, I have a mental trash bin. So like for a specific account that I'm trying to scale, right now I'm trying to scale this account. It has over 130K right now in it. And my mental trash bin in that account is 50K. So I'm okay with losing 50K in the process of scaling. So it doesn't matter how many trades I take throughout the month, because I have no idea how many trades I'm going to take throughout the month. It's going to differ depending on where we are in the market. So my mental trash bin is more so where I'm looking, what I'm managing, I guess, to say. Top Step is fine. Prefer not to use Apex because of that. It messes with my psychology, but it can't be hard to pass when they have 90% off sales. Yeah, 100%. I think that's one of the biggest reasons why I think people use Apex. It's because it's so cheap. I use Take Profit Trader, daily withdrawals. They do have unrealized trailing that stops at starting account balance on Sim and Life Funded accounts. Okay. Take Profit Trader. What's your guys' top right now? Top step? Where are you reading from? Oh, I was just catching up on messages. They're probably way above what you sent. Just wanted to tell everybody that the idea of Sarah to eliminate or limiting the use of social media apps right before the trading is really making changes because it gives us dopamine rush and a whole another emotion on every new reel you see. I'm on day 2, already deleted Insta, Facebook, and other social media apps, so you can imagine, and already feeling clarity in my thoughts. 100,000,000%, guys, and I said this last week, if you really want growth and you want to build personal, actual confidence in yourself, if you want to have clarity and build confidence in what you are doing, cut out all of the noise, because you focus too much on what other people are doing to get affirmation on what you're doing. And you're just constantly in this endless cycle of looking for affirmation or looking for attention or looking at when you don't want to do the work. So you go just exchange it for your short-term dopamine by looking at social media. And then you just get hit with thousands different of ideas, and you're looking at thousands of people's different lives. And then you forget about your own life. And then it numbs the fact that you're even a human being living in a special world, and you can't even focus on doing what you want to do because you're more focused on what other people are doing. And it's complete it's all noise. Stop looking at social media. Stop looking at what other traders are doing and focus on yourself. My biggest progression in trading in my personal journey was when I stopped caring about what other traders were doing. I stopped caring about what other people are doing. And I just focused on coming into the day on what I see, what I want to look for. Time and price versus New York session and the macro gets me tripped up sometimes. Most of the time, I'm always waiting for open, but doesn't this not matter at all due to time and price? For example, the 1 hour model on Thursday to complete buy side was the way before New York session. Yeah, 100%. But what New York is going to do is New York is going to base differently, and the morning session is going to play out differently depending on London and New York. So absolutely, price can play out an entire model in London and Asia. So what would we expect out in New York? Either a reversal or an initial consolidation move, right? Because if the objective in the model gets played out before New York, that's when New York's most of the time lower probability conditions. Do you ever wait to enter after fair value gaps get inversed, or do you do it just before it gets inversed? I'm always scared to enter before an inverse gets inversed because I'm afraid that I'm just going to respect it and go in the opposite direction. Also, do you ever put your SL to break even? And if you do, when do you do that? Sometimes I would put my SL at break even and get stopped, and then price would go to my TP right afterwards. Good question. So I want to take an entry off of an inverse as soon as it gets broken through cleanly. So if, for example, let's say this is the case. Let's say I'm bullish and we're looking to continue higher towards some sort of draw on liquidity. And let's say there's a fair value gap here, right? And we're holding bullish, and there's an SMT, and there's buy side resting above us, and I want to see a continuation. Let's say there's a fair value gap here that I'm looking to see get ran. If this is the case, so like actually let me draw this out. So let's do this, right? So I want to see this fair value gap get cleanly ran through with a follow through. Like I want to just see it get ran. So if we're doing this, I'm not taking it. I want to see this. Boom. Fat candle through it, disrespected, done for. At this point, I can just smack along. Stop at the recent low, smack along as soon as we break through it. If I see that candle just coming in and we're running through it, I can just smack along. If I want to wait, I would then zoom in and wait for a pullback. So this is very similar to the trade I took on Thursday. And then I would wait for a small, maybe pullback to a fair value gap, whatever, and then I would take a long. Or I would wait for a full pullback to the inverse. But normally I would want to take it on just straight the inverse. Friday night with you, I don't know. Had Instagram deleted for a while now. I think it was the biggest problem for me as it would interfere with so much of my time, not even my trading, but just my life in general. Ended up deleting a lot of other distractions like TikTok, and now I just go to enjoy what God created, and actually outside it's wonderful. Dude, let's go, Oscar. Let's go, bro. That makes me so happy to hear. Guys, once you get off like your phone and you realize that it literally is one of the biggest traps of society and tech companies and the government to control you and make you not want to work for your dreams and make you complacent, like, and you end up just enjoying God's creation, and you go outside and you spend time doing physical activities and you spend time doing things of substance, you're going to feel so much better. You're going to have so much more clarity. Like, you're going to realize most of the things of like yourself where you think you're lacking confidence or you're lacking this and you don't know what the problem is. Most of the time, the problem is either one of two main things. Health, so what you're feeding yourself, your activity, it's either something internally. Actually, there's three main things. It's either health, it's either internally health, you're eating like shit, you're not getting vitamins, your body's lacking something. Number two, it's either spiritual, you're basically under attack, or number three, you're consuming too much garbage and consuming digital garbage. You're considering like watching news that's of tragedy. You're watching brain dead, brain rot, pointless, no substance content that does nothing for your brain. And it's just ruining all your vibes. Withdrew $17K in 1 week with Take Profit Trader from one sim funded and got 3 more and put the 3 in a copier and blew them all. Shit messed up with my brain and kinda. One thing, well, keep in mind, you know that you've done it before. You know that you're able to make money, and what does it look like? Ask yourself that question. Say, hey, I withdrew $17K in 1 week and then I ended up blowing them. So what caused you to make $17K? I guarantee you it was probably effortless. You did what you were supposed to do. You took your trades and you just won. But as soon as you started probably getting over cocky, taking dumb trades, you blew them. So focus on the thing that made you successful and just focus on that. When we get a change in the state for entry, how often are you entering off that alone? Do you normally wait for the rebalance because you don't mention that there are scenarios where you don't need to wait for a rebalance? Find it difficult to have good RR when using 5-minute, 15-minute change in the state. So would it be potentially better to scale in after manipulation happens? Yes. I most of the time want to be taking my entry at the change in the state, especially if there's an inverse for value gap. So if we have an inverse and a change in the state, as soon as we break through that change in the state and the inverse, I'm slapping a short, I'm slapping along, whatever it is. Now, if we pull back and there's an internal, like I zoom in even lower and there's a reason for me to add, then I'll look to add. But I want to be taking my starter position on the initial break most of the time. Adding my question, for example, on the chart right now, on the 15-minute, you have the draw on liquidity as sell side, but how do you know it will go to that sell side versus it'll only go to equilibrium of the leg from sell side draw on liquidity to the current leg high? Sorry for the ugly drawing. Great question. Fantastic question. So this is where external draw comes into play. Right now, in this specific example, I do not know. I do not know 100%. Like I'm not extremely confident. Why? Couple reasons. So let me go through this again. Why am I not extremely confident that we go to these lows? Because on the bigger time frame, the bias has not switched bearish. Why has not the bias switched bearish? Because we are still at these highs. Now, I can lean and have a loose understanding and have a loose bias that we are bearish. Why? Because buy side's been taken. We're still holding the fair value gap to the left of us on ES as well. But what would really need to happen for me to be confident that the draw on the bigger time frame is lower? This needs to get ran through first. So this move that we have right now, that we're currently forming to go to these lows, I would need to see this model even play out first for me to have an understanding. So right now, in this specific example, I would expect internal low as my low-hanging fruit, right? So I always want to mark out what's my low-hanging fruit. What is something I'm very confident in the market taking, right? Now, right now, we could also hold constant encroachment. So right now, constant encroachment is my low-hanging fruit, which we just tapped. So I always want to focus on what's my low-hanging fruit that I'm very confident the market is going to. And that's a lot of the time internal liquidity. Because in this example, I am not very confident or super confident that we go to this low because the bigger time frame has not changed structure. Now, if we had this happen first, and then we have internal models here and we build price action, then I can say, oh, I can really expect us to go to sell side. because we've had the bigger time frame shift in structure. So let's say this happens, right? Buy side gets taken. Maybe we come back up again. Maybe we lack the change in the state, and then we come up one more time, and we're just focusing on building price action, and then we do something like this, right? So it's like highs getting taken. We run the fair value gaps, big displacement of downside, change the state. Right after this, I can be like, okay, I can look to see lower because the change in the state on the bigger time frame's already happened. Does that make sense? So it's aligning the biases, but always be focused on what the low-hanging fruit is with what you can recognize. I want to see an inverse Lucas most of the time, or change the state. Yeah, both of those could possibly happen, Hero. But both of these examples have the possibility of hanging out because the bigger time frame has not given us. That's why equilibrium is the low-hanging fruit. So if I am taking this short in the bigger time frame context is not telling me I should be holding my runner, or if there's a reason to go lower because it hasn't given me the bigger time frame context yet, I'm taking I'm taking partials at equilibrium because there's also internal liquidity resting there. There's no reason for me to now I'll hold a runner and move my stop to break even, but the bigger time frame hasn't validated for me to continue to hold. Because at that point, I'm guessing. I'm hoping to see the market move lower. I'm not being reactive. Do you always wait for a value gap to get inversed, or do you don't wait for an inverse and you just enter anyways? Also, would you enter on the 1 minute inverse fair value gap? There's a 5 minute fair value gap that's in your way. Also, there's some situations that you don't want to wait for. Yes. So if there's a 5 minute, it's a bad example. I'll look at this example. Let's say there's a big fair value gap here. Let's just say that there is. Do I care? No. I expect it to get ran because the price action signature tells me liquidity is what the most important thing is here. I am not worried about this fair value gap. If the model is there and we run an inverse and a change and there's a fair value gap, especially if there's an SMT, I would expect whatever fair value gap is there, especially if the draw is lower, to get ran through. So I'm not worried about it. Just like on the bigger time frame right here, we have all of these bullish fair value gaps. But if we have a 4-hour change in the state, I would expect these to get ran through. Have a good one, Oscar. So when the manipulation happens, you would zoom into the 1 minute, 15 second, look for a change in the state, inverse fair value gap for entry for best risk. Depends on the model. I'm not always looking at the 1 minute and the 15 second. Depends what's the clearest entry for me in relationship to what I'm looking for. Most of the time it's 1 minute. 1 to 5 minute. Breaker is an up close, down close candle is what I want to see. So like series of up close or down close candles. So number one, there's got to be manipulation. And I'm marking the up close, down close candle of whatever this move is. So high to low of whatever this last move is before the manipulation leg. And then I would mark this whole thing as standard deviation. But on a chart, I don't really have an example right now. But it would just basically be the series of up close or down close candles. But it's got to be like kind of like this, for example. The last up close, down close candle of this move that we end up closing above. And normally I'll just draw the bodies. But everybody draws breakers differently. But one thing you got to recognize is like, it doesn't matter if you draw it like this, or you draw it like this, or you draw it like this. The market's going to react the same way at the fucking spot. Like, we're all drawing a box in the same area. Like, think about it logically. Just recognize how it looks. Even if there was no candlestick, just recognize how the chart would look if it was just a line. Read price action. Don't read exactly every little detail of the candles. Read the overall flow of price action. Friday night to you. My strategy is that I would wait for a 5-minute inverse for value gap instead of scaling down to the 1 minute. Then does that mean I don't have to wait for the 5-minute inverse for value gap anymore if the picture is clear that we would go in one direction on the 1 minute? There has to be an internal model. If there is no internal model on the 1 minute, you should still be waiting for the 5 minute, because you can't, that means that you're expecting the 5 minute to get ran, but there's no actual model on the 1 minute. So in this specific example, I'm expecting if there's a fair value gap here to get ran because this has already happened. If this has not happened, I'm not zooming into the 1 minute here and expecting this to happen. I'm waiting for this to then happen, and then I'm expecting this to get ran through because of it, because we've had the price signature that says we're going to sell side. So like, for example, I won't take this, but like we'll watch it in the overnight session. Now, consequent encroachment's already been met, but if we run this 1 minute fair value gap to the downside and we continue to break through it, I would want to see a continuation to the low. What I've dealt with before is that I would enter on the 1 minute and the 5 minute hasn't gone inverse, then price would immediately go opposite in the direction. Exactly, because you're too zoomed in. The bigger time frame reasoning for price to move has not happened yet. So I would wait for the bigger time frame confirmation, just like here, waiting for the 15-minute confirmation and then zooming into the lower time frames to then take the short once the 15-minute got ran and the 15-minute change. Same thing if it was the 5-minute. Wait for the 5-minute, then zoom in the 1 minute. What's the biggest reason why some ICT traders fail? They're mental. They're focused on what they're trying to gain satisfaction from. Their inability to respect themselves enough to actually follow the decisions in which they say that they're going to do. And most of the time, it's ICT traders. It's not because of ICT. It's because of themselves. You are the problem. ICT is not the problem. Your strategy is not the problem. It's you are the problem. Now, most of the time, 80% of the time, it depends on where you are as a trader too. There's a chapter that everybody goes through where the strategy is the problem, and it's just you learning the strategy correctly. It's just you seeing price action correctly. And then you come into the bigger majority of your journey, which is you are the problem, and you have to work on you. Normally, like the first 6 months of trading is like strategy, and the rest then the following years is you, and just in adapting strategy. So you wait for a higher time frame, then enter, then you just enter off the higher time frame, then instead of zooming in. No, I'm not entering off the higher time frame. I'm waiting on the higher time frame to give me the draw on liquidity. And then I'm waiting to take my entry on the low tick. So for example, what am I waiting for? What's giving me my bias? I have a bias that we want to go to sell side if we break through this fair value gap and we break through this change in the state. Why? Because buy side internally has been taken and buy side here has been taken. So I want to see price fall back down. So once we break through this 15-minute, then I can zoom in and I can look for a trade. So what am I then looking for to take a possible trade here? Manipulation, possibly a pullback into an inefficiency, maybe an internal high getting taken. What is happening here? We have a big inverse fair value gap that got ran through. Maybe look for a rebalance here to take a trade. Do we get it? We almost take it. We don't take it necessarily, but an internal high was taken. So what am I waiting for here? Displacement. I'm still watching. Oh, what happens here? Highs get taken. Then what? Fair value gap gets ran. Boom. Entry. Short. Bank. Stop. Bank. Take my short. Once the 15-minute is already done, I'm looking internally. What? For manipulation and then my internal model. High gets taken. Fair value gap gets ran. That's my entry. So I'm using the bigger time frame to get an idea of where price is going and validate the idea of where price is going, and then I'm zooming in. So again, same thing that's happening right now. Fair value gap's getting ran through, showing order flow is still continuing lower. Now there's a possibility we respect consequent encroachment, but I'd want to see us follow through to sell side. Why don't you enter off the 15-minute inverse and get a better fill? Because it ruins my RR. Because if I'm trading the bigger time frame model, that means my bigger time frame model stop has to be all the way up here. But if I'm taking the internal model, that means my stop can be a lot lower. So for example, the 15-minute candle closes right here. So if I take my candle close here, I have to put my stop at this recent high because I'm taking it off the 15-minute, which means my RR is 1.5. Versus if I wait for an entry here and then put my stop, let's say here, and now my RR goes to 3.55. So when I wait for a bigger time frame draw and I take an internal model, I'm going to always have better risk to reward. I thought you would slap the entry on the 5-minute change in the state and inverse for value gap. Then you can zoom into the internal model on the lower time frame to add to the position. If it's a bigger time frame, like a 15-minute, I won't. It depends how confident I am. If I'm very confident we're going to this low and there's an SMT and there's a reason to, then I can do something like this where enter two cons, have a pretty loose stop loss. Like, for example, the 21K trade day that I had was a pretty loose stop loss, and then I scaled in. So it depends on the setup. But most of the time, I want to see bigger time frame confirmation and then zoom in to take the entry. If it's very, very clean on the bigger time frame and I'm very confident, then I'll enter a position starter, have a looser stop, then wait to add. But wouldn't sometimes it would just keep going and you would miss your entry? Like, for example, if you're thinking like that, then you're going to take bad entries, though. If the market tells me what to do, if I'm going into the market saying, oh my God, I'm going to miss my entry, and I take a fucking setup that's not in front of my face, you're going to end up finding out that, guess what? That entry ended up getting fucking given to you after you got stopped. So what would happen here? Oh, my entry. Oh, let me enter any sort of short here. I'm going to trail it to the high. Oh, stop gets high, and then the entry's given. That is why people get stopped and the market goes back in their favor. It's because they're taking entries off when they think the market is going to go instead of the market telling them when the market is going to go. Be reactive. Stop caring about getting a good entry. Stop caring about taking and missing out on the setup. Wait for the market to tell you what to do. You are nothing but a submissive monkey that sits in front of the charts and presses a button. Sorry, I get passionate. I just start to yell. It's not personal. It's because I care about you, if anything. Alrighty, guys. Let's see what happens in the overnight session. Let's have a good week. It is a big week ahead of me for me, so I got a lot of shit to plan on getting ready for. I'm very, very excited. I'm also very excited to bring you guys alongside me with my travels and just kind of share with you the life of what I kind of want everybody to experience and have the opportunity to experience of just, being able to go travel and work wherever. So very excited. Enjoy the rest of your night. Get some rest. Be productive. And I will see you guys tomorrow, or not tomorrow, actually tomorrow night, I guess. Or Sarah will do a session tomorrow night. We'll decide if we want to do a session tomorrow. But I will be, most of the time, just I'll possibly look at the market sometime tomorrow and just see where we are. I'm going to most likely not take a trade tomorrow. But we'll see what happens going into Tuesday. And we'll kind of see what happens going from Monday close. So, all right, guys. Enjoy your night. Let's have a great week. And I'll see you all soon. Peace out, guys.